Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. Yes, what all the fickle stockholders wanted, a stock split. But this isn't any potential stock split. Investors are expecting an encore from the last split. When the last split was announced, Tesla's stock price rallied almost 50%. However, Tesla is about 2.5 times the size now from what it was back then. It takes more capital to push it up as much as last time. But one way or another, investors and the market will still be expecting some movement in the stock. Now, once it reached its peak last time, there was a brief pullback before the stock once again surged. Now, if last time you tried to time the market and sell your shares from the inflated split announcement, you might have thought it was smart. Except after that slight pullback a few months later, Tesla's stock price doubled. Wow, that would have been really rough if you tried to time the market like that. And even rougher if you'd shorted it. But at the market close at the time of this video, Tesla's stock price jumped 8% in a day, over $80, which is actually more than I even paid for my stocks. Yup, the market seems to love any inkling of Tesla splitting. And this jump was not even because Tesla's stock is going to split. It's just from the potential. We'll not even find out if the stock is actually going to split for some time. Tesla has said that shareholders will vote for a stock split at the next shareholder annual meeting this year. Right, this isn't even an announcement of a stock split, but a vote on the stock splitting. To be honest, I think it's pretty obvious which way the vote will go. I think everyone will benefit from the stock split, and clearly this is not the end of Tesla's growth. But this will not be for some time. The last annual shareholder meeting in 2021 was in October. Then in 2020, it was Battery Day in September. And in 2019, it was June. In other words, we don't know when this vote will occur. It could be in a few months or towards the end of the year. I would say that by that time, the excitement of the stock split would have lost some of its energy, and the energy will be renewed as we get closer to the date. Then, when it is announced that the votes came in for the stock split, then we should see the stock jump again. It could jump 20% or so, or more. Investors seem to love Tesla stock splits. Tesla isn't the only stock splitting as of lately. Amazon announced a 20-for-1 stock split earlier in March. Alphabet, or Google, also announced in February a 20-for-1 stock split too, of which both of those stock prices are trading higher than Tesla. At the time of this recording, Amazon is about $3,400 and Alphabet $2,800. After their splits, this will take them down to around $170 and $140 accordingly. So you might think that Tesla is looking for a similar price target, perhaps in the mid-100s. If Tesla split 20-for-1, then the price would be in the 50s, so I don't expect them to match Amazon or Google. If Tesla split 10-to-1, then we're still only around the low 100s. The last split took Tesla's stock price to about $400. Therefore, I probably would expect another 5-to-1 split for Tesla, taking the stock price to around $200 a share. If it is higher, like 10-for-1, then that could possibly be a really good sign, in that Tesla thinks there is a lot more growth to come soon in that stock price, as otherwise it would fill out a smaller split too soon. But my money would be for 5-for-1. It's the same as the last one too. I actually explained in the past about how I thought a Tesla stock split was coming, as I was talking to some Tesla employees, and they were telling me that it makes it harder for employees to buy shares if the price is too high, which makes sense, and Tesla like to reward their employees in stocks. It's a great incentive for them, and there are multi-millionaires still working at Tesla as a result of these stock incentives. This also leads me further to think that there is a high chance that the stock split vote will pass. Other than that, these days there are not the benefits of a split that there once was, due to the fact that a lot of trading accounts allow you to buy a fraction of a share anyway, as in if you only have $100 to invest in Tesla, then you can just buy $100 of Tesla, rather than having to save up $1,000 to buy a whole share. However, there are also options. Now, options have been getting quite expensive lately. It can make it a lot harder to press that buy button when you're looking at 5 figures just for a contract. It definitely makes it easier, and you can diversify more with different strike prices or expiry dates, if you can buy 5 times as many options for the same price as one. Hopefully, by the time we're at the shareholder meeting, I might have accumulated some more play money, and I may buy some options in anticipation of this split run. Right, we don't even officially know Tesla's stock price will split, how much by or when. Again, this could potentially be an asymmetric investment. Perhaps an 80% chance that in the shareholder meeting, Tesla's stock splits, and you could double your money. Anyway, I only advise to play this game with money that you can literally afford to lose. Now, I probably don't have to explain to Tesla Economist viewers how a split works, and how you will still have just as much a proportion of Tesla than before, and all your options will also split too. It's nice having an audience I don't have to explain things to, and we can just get on with talking about what is actually important in the company. Right now, we're also hearing about China being shut down for another few days, yet investors are far more concerned about the fact there is a split coming. I'm actually hearing a bit of FUD about China, one analyst claiming that it takes a week to ramp up each time. and they've been shut down twice in March, which therefore means 2 weeks of lost production. Of course, he made up this 1 week figure entirely, and on top of that, even if it did take a week to ramp up, well, during that week, Tesla is still making cars. The Shanghai shutdown will likely make very little difference in deliveries for the year, as Tesla is still facing a chip shortage. The chips that were not used in the vehicles in March, well, they can be saved for more vehicles in April. I don't think people realise how fast Tesla can get these production lines, let alone how fast they're going to in these new facilities. On top of that, we're also hearing about Andrej Karpathy leaving for a few months. Nothing I would read into in regards to FSD issues. There's obviously a great team still at Tesla, and he sounds like he's been working flat out for the last 5 years and could do with a break. Either way, none of this made any impact to the stock price compared to the possibility of a Tesla stock split. Another stock split so shortly after the previous just goes to show the level of growth this company is achieving and will continue. And we are hearing some insane levels of growth targeted for this company, although they only really refer to production levels. As you know, I've shown models demonstrating what Tesla's economies of scale will look like. The growth that is coming in production is going to be seen to a more extreme in the actual profits. The more Tesla can ramp up production and reduce OPEX per vehicle, then the more profitable Tesla becomes. On top of that, if Tesla can double the speed of the production line, then that factory is suddenly the equivalent of half the price in capex per vehicle. When Tesla start using more revolutionary new manufacturing processes and continue to further vertically integrate, then the economies of scale grow further again. When more factories are producing locally, resulting in less transportation costs, the profits increase again. When demand keeps getting more and more crazy and Tesla have to raise prices, the profits increase again. When Tesla introduces more revolutionary in-house batteries that have higher energy density and lower cost, it increases margins immensely. All of these are only for the car sales business, and I'm not even including FSD. Like Elon says, the numbers get nutty, although he was referring to just robotaxis. The numbers are nutty enough without robotaxis. We are only at a run rate of just over 1 million vehicles a year, which is extremely high for any EV company, but not so much when compared to the equivalent ICE companies. But I repeat again, only 1 million a year. What happens when we get to 2 million? What about 5 million? And what if we hit that stage in just a few years? Tesla has been spending years, if not over a decade, getting all its ducks in a row. We are just about to see them pull the trigger. And finally, this company will get off the ground and enter the major leagues with actual production numbers and show the world what manufacturing scalability can really look like. Also, is it possible that we could see a repeat of what happened last time, and another split will give this stock another massive boost again and potentially double the stock price, or possibly hit something north of $2,000? Either way, never a dull moment as a Tesla investor. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.